Scott Peters, last year was a rough one for REIT performance. Your stock was flat. You're up 4% this year already, though. What's your outlook for the rest of 2014?
Well, we look at it from a company specific basis. We're very well positioned for 2014. We come into 2014 with low leverage of about 33%. We've made $400 million of acquisitions in 2013. We just got a credit upgrade that saves us a couple $1 million a year on an annual basis. And our portfolio performed at 3% same-store growth. So we like the prospects of 2014 for Healthcare Trust of America.
And you added to that portfolio in the fourth quarter. You bought $156 million worth of properties in Florida and Texas. Are those the hot markets? Is that the place to buy right now?
Well, we like those markets. We think the Affordable Care Act is going to be prevalent and reward those folks that invest in Texas. Texas is a growing economy, tremendous opportunities there. South Florida, another high density. You've got a lot of money moving in from Central America. Healthcare systems are prospering down there. So we targeted those two markets in 2013.
Is it the Affordable Care Act, Obamacare, which is why investors should go for Healthcare Trust of America as opposed to an auto REIT or an office building REIT or any other kind of REIT out there? Is that your advantage?
We think the Affordable Care Act changed the fundamental basis of investing in real estate as it relates to medical office buildings. Core critical real estate located on campuses throughout the United States. You've got employment that's growing in the healthcare sector. You've got occupancy gains from healthcare healthcare systems needing more space. You've got physicians that are expanding. Tremendous macroeconomics, we think, that fit medical office buildings specifically.
And as I mentioned at the start, REITs really got hurt last year, especially when Ben Bernanke gave his tapering talk in the spring. Didn't really recover. What happens if rates move much higher? How does it help and how does it hurt you?
Well, frankly, there may be an overreaction here in the last 3-4 months to the raising of the rates. But, the economy gets better, physicians get wealthier, they see more patients, healthcare systems get more reimbursements. Again, the Affordable Care Act is almost an economy on its own. Employment's supposed to grow in healthcare faster in the next 10 years than any other sector. So a growing economy for us from a basic rent perspective, from those that occupy our space, I think it's positive for us.
And putting it all together, does all that lead to a higher dividend for HTA investors? Right now you pay around 5.7%.
Well, we've stayed steady in 2013, 2014, 2015. As we grow our earnings, as we continue to gain occupancy, as we acquire more acquisitions, use our balance sheet to get more moderately leveraged from being under leveraged, we certainly will focus on returning money to shareholders.
All right, thanks a lot, Scott.
Thank you very much.
Thank you for watching The Street.